what if you're a mixed income earner? So let's first define who is a mixed income earner. So they are the people who derive income from both business or practice of profession and compensation income. So they earn from doing business as well as being employed. So an example of which is an employee who also works part-time as a freelance photographer. Now, how do we now compute for their income tax rates or their income taxes? Because there are two sources of their income. So first, let's separate the two. The first thing that we have to do would be to compute for the income tax on the compensation or the amount received from the employer. So we simply use the graduated income tax rates that we discussed in previous videos. Now, for the income generated or earned from business or practice of professions, there would be two options. The first option is to make use of the graduated income tax rates and still pay for the percentage taxes. So in this case, you simply have to consolidate or add the values from your employer or the amounts that you earn from your employer as salaries plus the earnings from your business. So you consolidate the income from compensation and income from the business or practice of professions. And this would be covered by 1701A. So typically, if you're an employee, you will receive the so-called Form 2316, which will be issued by your employer. And this would be a summary of all of your earnings during the year as an employee. And if you do not have any other sources of income, this would suffice as your income tax return. However, if you have other sources of income, you have to consolidate all of your earnings during the year, including those from your employer and from your business, in one form, which is 1701A. Now, option number 2 is available for non-VAT taxpayers. So this is what we've discussed in previous videos as the 8% tax on gross sales or receipts and other operating income in lieu of the graduated income tax rate, which is option number 1, and percentage taxes. So if you have two sources of income and you chose option number 2, your compensation income or the income tax for your earnings as an employee will be based on the graduated income tax rates. Now, your income tax due from business would simply be gross sales or receipts multiplied by 8%. However, you need to take note that if you are a mixed income earner and you used option number 2, the 250,000 peso tax exempt income has already been taken into account when they computed for your income tax on your compensation income. So there's no longer 250,000 pesos deducted from the business or profession income. So I hope you take note of that, because this is you don't want to be penalized for using 250,000 twice. So if you use 250,000 in your compensation income already as a as portion of your non-tax or tax exempt income, you should no longer use that when computing for your option number 2, income taxes. All right then, I hope that clarifies things up. Again, I'm excited to see you in the next video.